Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance. Here are your hosts, Lucas Muzialski and Leo Severino.
Hello everyone, and welcome to the first episode of the Wall Street Lab podcast.
Yeah, we couldn't be more excited to be here. We've been working on this for a lot longer than you guys think, and actually a whole lot longer than we thought we would take to get here. So it's really nice to finally be able to put out some good content for you guys. For the first episode, we couldn't think of anyone better to start out our podcasting journey, and the person is Simon Hirst. Luke, why don't you give us Simon's background?
Yeah, sure. So Simon has spent majority of his life working in the investment banking industry with some of the top companies in finance. He spent over 12 years working for Lehman Brothers. He also worked for Salomon Smith Barney, which is now the operations group of Citibank. He served as the joint global head of mergers and acquisition for Commerzbank. And in addition to that, he also served as a CEO of a London Stock Exchange listed company. Simon is probably best known as the founder and managing partner of a boutique merchant bank, Tri-Artian Partners, which we'll discuss in further detail in the interview. Simon is also a visiting professor at some of the top European business schools, including the Frankfurt School of Finance and Management, Cass Business School, as well as IE.
So during the interview with Simon, we touch on very interesting topics and stories from his professional career, some of the deals, for example, that he's been involved with, mentorship programs, and how important he thinks that having a mentor is.
And polished shoes as well.
Yeah, I actually learned my lesson there, and you'll figure it out why very soon. If you like what you hear, it would be really helpful for us if you could rate us on iTunes. It really helps us grow the show. And just one last thing before we move into the interview. The content you're about to hear is for information purposes only. It constitutes the opinions of individuals and therefore should not be treated as investment advice. So without further ado, please enjoy our interview with Simon Hirst.
Hello everyone, and welcome to the first episode. We are sitting here today in Frankfurt, Germany, and we're talking to a very special guest, Simon Hirst. Simon, why don't we start off this interview by you telling us a bit of your educational background and what did you do before you got into the world of finance?
Sure. I mean, I think in terms of educational background, which is sometimes sort of useful as a sort of preamble to these discussions. So I was educated at Eton and then at Oxford. I was at Keble College, Oxford, and I was lucky enough to win a scholarship with my twin brother. Actually, he did not win the scholarship, so I got the long gown, he got the short gown. And then I worked for 2 years at a merchant bank called Hamburg's Bank, and that was quite a rude awakening in many ways, because family run, very famous Victorian sort of merchant bank, okay. I guess you'd say.
How was that experience for you? Was it your first proper finance gig?
Yes, that was my first job, and other than a few holiday jobs in Harrods, packing up before Christmas. But I mean, it was interesting. It was a family-run business, but no training at all. And it was kind of a shock to have got an Oxford education and walking into somewhere where actually it wasn't clear how you were going to learn anything at all. And there was in my department that the guys that ran it resigned quite suddenly, and I never forget the son of the family, Charlie Hamburg, came down to our floor. And he said, listen, I'm going to take personal charge and I'll be seeing you guys a lot more. And he turned up, next time he turned up was in June, Ascot week, in a top hat and tails. I said, how's it going? It wasn't going very well. So I was actually lucky to get a fellowship to go to the Wharton School in Philadelphia. So that was complete change, right? You were that school, you were with people who were very like-minded. They'd all been to good universities. They'd all had a couple of years' experience. So it was like a lightning bolt, right? Suddenly, you're actually in the real world.
I actually had a chance to visit Oxford not long ago for a private equity conference that was going on there. I was so surprised to find that it's a really small place, way smaller than I expected. So how would you describe the experience of being there and the differences between the two schools?
It's very hard to say. I mean, I think one did lead to the other. Oxford did have a very good social life. I read geography. It was well taught. I was lucky enough to get a first-class honours degree. That was, to be honest with you, highly important to getting to Wharton. I couldn't really have afforded to go there on my own. So this fellowship I won was paid for everything, basically, even flights home 3 times a year. So that was what I would say is the Wharton experience was highly inspirational, right? It really got you revved up, and you were with professors that really sort of taught you things that you'd never heard before, but in a very positive way. So I would say Wharton was probably a unique experience for me.
Jumping forward a bit, because you are a professor yourself, you've taught at 3 schools, if I'm not mistaken.
That's correct,
so far. And how does that experience relate to what you've learned in Wharton and Oxford?
Well, I'd say ironically, actually, but the thing that was, I mean, I liked all the courses. I liked the finance courses. The courses that were particularly useful, ones that I had no further exposure to, because I went into the financial world. So marketing, law, all those areas. I probably never had any other exposure to those. But at the same time, they're kind of useful things to have at the back of your mind when you're looking at companies. When it comes to finance, I would say quite theoretical, and that's the same with all business schools today. So the difference I would have now is looking at it from a perspective of actually seeing how companies really operate, how their accounts really work in practice. So you understand the business and the numbers and how they relate to each other. That really comes from working in the industry, right? You couldn't get that any other way.
So after your first job, what happened then? What made you switch to another gig?
Well, no, I think I was always destined for. I mean, Hambros was very much finance. I wanted to do finance. I didn't really want to go back into what I call an old family style merchant bank with no training. I luckily managed to get a green card. I was taken on by Lehman Brothers, which was a phenomenal firm back in those days. We're talking back in 1984, so a long time before the crisis. The founders of Blackstone were the people running M&A. So this was completely the opposite from Hambros. You were thrown in the deep end, working on deals. Within 6 months, I was that in Hong Kong for 3 months, working on one of the biggest restructuring of a company that ended up being owned by the family, the Tung family, he became the first governor after the British left. Unfortunately, well, it seemed unfortunate for me. When I arrived there, I was the most junior person in the team. All the partners wanted to stay at the Mandarin Hotel. So they said, sorry, Simon, no room in the Mandarin Hotel. You've got to go to this place called the Island Club. Well, it turned out to be C.H. Tung's private residence overlooking the South China Sea. So I stayed at his place for 3 months. And when we had the Christmas party there, I was nearly killed by all the partners who hadn't let on how comfortable it was. But I would say putting yourself into the deep end with very, very experienced, the top partners of the firm, they trusted you, so you learned very, very quickly.
Touching on investment banking and your experience there, the work-work balance, of investment banking industry, what was your experience with the work-work balance?
Well, the work, I think I should add one more way. It was work, and then carrot, right? Because the reality was you got such, even by nowadays standards, right, you would have to work crazily hard, many weekends, almost every weekend. I would say at least one all-nighter a week. But then every year you get 200% of your salary as a bonus every year. So you got very well remunerated. And I would say that was the one difference of working in America. In America, if you're making money for the firm, they don't mind how much they pay you. Whereas those days in England, there was still kind of a ceiling, right? You can't pay this chap too much money. So we're not talking obscene amounts of money, but for a young person, right, it was very invigorating to feel that every year you could sort of double your income.
Right. Yeah. So what happened after Lehman Brothers?
I left probably 10 years before the end of Lehman Brothers, so I didn't see that. In a way, actually, I was fortunate, actually. I mean, you can't quite believe, right, but by the end of it, most of the senior partners were taking most of their bonuses in stock. They probably had 3 years' worth of bonuses in stock. So I know, certainly 2 people I knew at Lehman, both partners, $40 million went out the window the day it went down, right? So it was pretty, but I was well gone by that stage. So what happened to me? I went to Salomon Smith Barney, where I ran the European Industrial Group. That was a very, very good experience. And during that point, I actually spent quite a bit of time in Germany, working with Hochtief and to some extent Siemens on a project that probably went on even longer than the demise of Lehman Brothers, actually, which was the airport project here. Anyway, so that was really the background. But the answer with Lehman, it's a sad story, but in Europe, they have one good rule, right? The chairman cannot be the same person as the chief executive. Lehman, the guy was one and the same thing. And apparently in his last year of office, Dick Fold took one momentous decision. He had an elevator put up directly from the lobby up to his office. So he didn't have to go up the stairs with anybody else, right? That's a very bad leading indicator, right? I would say.
I think that was featured in the movie, The Margin Call.
Yeah, could well. Yes.
I don't think it was mentioned that it was Lehman Brothers, but it was sort of.
Yeah, but honestly, I wouldn't want to underestimate the talent of people that were there at the time I joined. It was quite extraordinary. So Pete Peterson, Steve Schwarzman, the two founders of Blackstone, were there. Steve Schwarzman was running M&A. It was a sort of the sort of talent of Wall Street was there.
Okay, so we've touched on the financial crisis. Do you remember where you were when the financial crisis hit and what you were doing?
I have to be honest with you, not really, because I've seen so many financial crises, right? Okay. So if somebody said to me, what's the crash, right? The crash to me was the crash of 87. And in those days, they had sort of the equivalent of Bloomberg, Reuters terminals outside. This may sound slightly inappropriate remark, but I can only tell you that the definition of a stock market crisis is when all the secretaries are queuing up to look at the Reuters screen, right? That they've never looked at before, and it's just dropped 600 points in one day, right? So, 87 was a bad one. There was obviously the dot-com meltdown was a massive situation that affected a lot of businesses very badly. So the answer is this current one was very bad, and it could easily happen again. Because when they say no bank can be too big to fail, it's kind of an absurd comment, because a bank is made up of deposits from people in a bank, and when they panic, they pull it all out. There's simply no bank in the world that has the resources to fund a true run of the bank. So every time there's a banking crisis, the governments will have to bail out the banks. It will happen definitely again, just a matter of when. And
you mentioned your experience in Germany.
Yeah.
What happened after that?
Well, actually, no, I mean, it was completely unrelated, but I was for a period of time actually head of mergers and acquisitions at Commerzbank. So that was an interesting experience. The only thing I would say was it was they had built very suddenly a very large London team, and wasn't really very well integrated. And I would say a great lost opportunity for Commerzbank. I then became chief executive of a UK public company, so I didn't really sort of go beyond that phase. But I think in some years after that, actually, effectively, the investment banking side of Commerzbank was abandoned altogether.
Was that the moment when you transferred into private equity?
After that, what I did is I got a rather unique opportunity to turn around a London Stock Exchange listed company called Durlacher Corporation, fairly small, historic company, broking IPOs. It was more equity capital markets trading. My role there wasn't really to be in the investment bank. I started that as head of corporate finance, with a view of building business, right? In other words, targeting new business, because the firm really hadn't done that. And we managed to double the revenues of the business in 12 months. So it was very aggressive. And the stock price went up about 5 times. I then became chief executive. And then 6 months later, we merged the business in a reverse merger with another company, a division of Lazard's. And Lazard was keen to basically get rid of this division, and the one way they could do it was reversing into an existing public company. And it so happened they had a very attractive employment stock option plan. So actually, in the end, a third of the combined business ended up getting owned by the employees. So it was, from all points of view, everyone was pretty happy out of that deal. But that was a turnaround situation. I was then, I agreed this transaction, and I agreed I would stay for 12 months and then I would leave, because I didn't really want to be a long-term broker. I was more of an investment banker.
Okay.
So really since then I focused through a small firm with some of my Lehman colleagues called Tri-Artisan Partners, and their focus was purely private equity. So Apollo, Blackstone, KKR, all the biggest private equity firms.
So how would you compare your experience within private equity to your M&A experience? What's different? Because we know many people transfer from M&A into private equity using M&A as the means of entering private equity. Similarly to management consulting, most of the people in private equity are usually from those two fields. Yeah. So what would you say, is private equity like an end goal to a career, or would you say why do people transfer to private equity? What's so interesting about this?
Well, I think that's an interesting. I mean, there are a few questions there. I mean, first of all, having had a lot of exposure to, I mean, well, by the way, if you're from outside one of those firms and you're advising them, the only way you can do it is have enough sort of a presence that you can deal with the top partners of the firm. You can't deal with the sort of VPs. They don't command the business, right? So, but I would say it was one of the absolutely most interesting phases of my career. And private equity does not always get a good reputation. I think one of the German finance ministers referred to private equity as vultures. I forget the German one, but it was a classic speech. And in a way, they do have this image of going in and cutting costs, getting rid of people. And there are elements of that which are true. But I would say that the real truth is completely the opposite, right? These guys, if you look at the example of KKR with Boots, where they worked with Pessina, who was the famous CEO of that business, they massively grew the top line and then obviously improved margins. But you can't really make money on transactions unless you can grow revenue and cut costs. You need to do both. So where do I think they come about things differently? They understand the things that I teach, I would say. That's why I can teach them. They understand how income flows into cash flow and sorts out the balance sheet. And if you met most strategic planning directors within a large corporation, any country, even Germany, UK, US, head of M&A, they're very focused on normally just what appears on the income statement. They don't have this great understanding of cash flow. It might sound terribly basic, but they're using models all the time, right? Their mind thinks like an Excel spreadsheet. So they're spitting out, every time they do a deal within a year, the cash is moving. Now, they will make some bad mistakes, right? Have been a lot of companies which have not made it under private equity ownership. If you're going to leverage 75%, if things go wrong, your company will fail.
What would you say about value creation in the private equity industry? What's your most favorite way or most efficient way to create value in private equity investments?
Well, I think the real value added is what I call the long-term value added, and the best firms are able to do that. The worst examples, and there have been quite a few examples, people who leverage up the balance sheet. The banks are half asleep. For some reason, the bank actually lets them pay out a dividend. There have been quite a few of these where private equity investors have taken out twice what they put in within a matter of years in the form of dividends. And then the firm has actually gone bust after they've taken their money out. Now, I would say that's pretty much the bank's fault, right? Any normal bank would have a covenant, and that would simply not be permissible. So it's easy to avoid. Well, on the positive side, where the best ones, as I say, the ones that are really truly growing the business, they understand. First of all, they'll probably invest alongside a very experienced chief executive. So it'll either be the current executive or more likely somebody they work with. They will have been a CEO somewhere else. So they're going to treat this as if they are the true owners of a company, doing the best for that. And why is that the case? Because they've got to be able to exit in 3 to 5 years. So if they have a short-term gain and then the business goes down, they're not going to be able to exit, or they will exit at a low valuation.
What advice would you give to people who want to get into private equity? Maybe they just graduated, maybe they had some experience in investment banking, or they thought, private equity, this is what I want to do. What advice do you have for people that would like to start out in this field?
Yeah, I mean, listen, it's fair to say it's a very, very competitive world to get into. If you're summa cum laude from Harvard Business School, you might have a chance to get in directly. But what I would say to people is that's very rare. Most people enter that industry probably having done something else for a period of time. And what is the best way in? The best way in is to have an industry expertise. Now, when I say that, I don't mean working necessarily in an industry, right, in an industrial company. What I mean is, say, working in an investment bank, being an absolute specialist in financial institutions, banks, insurance companies, whatever. Or they could be in consumer products, but have a very, very sharp focus, because every one of these firms, right, is organized by industry subsector. That's how they gain. They don't just go into a company cold. They're going to have somebody that's been in all the similar companies recently. So my advice is focus on the industry sector that you're interested in, and use that as a way to get in.
That's great advice. That's what we keep seeing over and over. The industry experts being praised over anything else.
Yeah. Because a general investment bank, unfortunately, is although it's very hard even to get into an investment bank, it's a fairly it's a commodity to some extent.
If you were to start over, go back to your graduation days, would you choose the exact same path as you have, or would you change something?
I think with hindsight, right, there's always things that one would change. If I was giving advice to anyone of the younger generation starting out on their career, first piece of advice: start at the very best firm you can get into. Very easy to trade down from Goldman Sachs. It's very hard to trade up from a small regional broking firm to get into Goldman Sachs. It will never happen. Now, I'm not saying you go to Goldman Sachs, but just in concept, right, you want to start out at the top. And the other thing is, I would say, don't change job the first time you get pissed off, right? Because that's tempting to do. But you only, in reality, have so many changes of job that your career can withstand. If you show up at the age of 40, 45, having already done 6 jobs, it's probably not ideal. So
now we're going to get into more personal questions.
Right.
Now, so if you could outsource any daily activity, what would it be?
Well, actually, it's impossible, but the journey to work would be good to outsource to someone. if I was in Doctor Who, I could just go into that little Dalek thing and just press the button. That would be good. The amount of time wasted travelling, right, is absurd.
Yeah.
I'm now partly employed, partly self-employed, so I actually have this absurd thing where I'm walking down the street and I see all these guys bumping into lampposts with their iPods, and and you wonder where they're going, and you actually do wonder what they're going to do, right, when they actually get to their office. It's kind of, it's incredible, really. So anyway, I wouldn't outsource anything else. The one thing I would say is turn the iPod off and start thinking about your first meeting of the day, what you're going to say. I mean, I'm shocked, right, that there is a culture change, which unfortunately one man can't turn the tide, right? But I say to every single class, right, these new devices are good, but actually nothing beats human thought, rational thinking, some time to prepare.
No, please don't turn off the podcast now. iPods are good for you, you learn a lot.
No, I have a famous slide which is adapted from another famous slide, but it shows the evolution of mankind, right? And the last two, one has the white earpieces and the other now has the new big full white headphones, right? And the circle is around the one before that, right? Investment Bankers Rex, right? Which is sort of the guy before these devices, and probably might do rather better.
So, if you're looking for a potential job candidate, what questions would you ask him? What quality are you looking in the candidate? We know that everyone has this one thing. Yeah. For some, it's just pure amount of work that people are willing to put in. Yeah. For some, it's talent. I don't know. What is your pick?
Well, I mean, it's one of those depressing facts, but I think it is true. I was head of recruiting at Lehman for the Wharton School, so I had to do endless interviews. But most candidates selected probably within 30 seconds to 1 minute they walk in. That is awful. By the way, it's not appearance, as you might different from what you might think. What it is actually sitting down and being relaxed and probably talking about nothing to do with the interview at all, right? So just breaking the ice. The why is that quite important? Because it's exactly the same as what I have to do if I go and see if I was to go and see the chief executive of Shell or any big company. What would I, when I walked in the door, I would crack a joke, ask something general, even if you're really desperate, talk about the weather, but anything other than, by the way, why is that so important? Because actually the interview often never gets started, right? You start talking more in a more relaxed format than the question and the answer.
Right.
But, so I advise everybody, including my own children, right, that's a very, very important first minute into an interview. And beyond that, ask intelligent questions, but ask a question in a way that shows that you have some knowledge, right? Don't just ask the question, but put it into some context, like in the context of his company, her company. So that's the other thing. Read the accounts of the company you're going to see. Read the footnotes, and you don't want to ask on note 25 why is X something. I mean, that's a bit too detailed. But there are some. By reading the annual report, you're going to pick up on some issues, right? General issues about the trading of their company. That shows you've done your homework.
So, over the years, you've been in corporate finance on Wall Street for many, many years.
Yeah.
What do you think has changed throughout the time that you've been working there? What do you think is the most significant change that happened?
Well, funny enough, you might think technology, but actually, another thing I tell my students, when I'm teaching M&A and all the concepts, theories, financial calculations, those calculations have not changed for 30, 40 years, because it's a bit like gravity, right? Newton's law still prevails, right? Even now, even Google can't change that, right?
The whack is still there.
And the whack is still there. So these things sort of hang on in there. So I would say... what has changed probably, I mean, the world has become more politically correct, sadly. I say sadly because in my day you were allowed to crack any number of appalling jokes and no one would sue you or do anything else. Now, I think it's fair to say you have to be a lot more careful, right, in your overall demeanour, how you treat people. But the answer is don't take that too seriously. People still like a bit of humour in the workplace, right? If you don't think you can say anything, then you're just going to be a sort of robot sitting at one's desk.
Well, we know that investment banking is not only Excel tables, but also working with people.
Yeah.
And so my question to you would be, what did you learn about managing people throughout the years that has helped you to talk to people and communicate with them effectively?
Yeah. I never had problems communicating with people, only because I always had a fairly wacky sense of humour, right? And that does to some extent help. But I would say, in terms of managing your team, right, the team that's working for you, that is of critical importance. If you start working with a team and they all start complaining to your bosses that you're no good or you can't manage them, right, that you'll get a revolution. You will get a revolution on your hands very, very fast. In all of these firms, all of the employees, right, they are very high quality, very highly educated. So they're not going to sit around and just take a poor manager. So what have I learned about management? One is to be quite direct. There's no point in delivering half bad news to somebody, only to deliver them bad news a week later. People don't like being messed about. So you have to be fair, but you have to be very clear. And I would say above all, most important thing for managing young people is to give a very clear, realistic objective. Because what normally happens in most investment banks, particularly in New York, a partner will come back from having the weekend with his family at the Hamptons, right, on a nice sunny weekend. And he'll suddenly remember on Sunday morning that he's got a meeting on Monday morning. Very important, the whole presentation, all numbers need to be run all Sunday night. Now, people don't really take kindly to that, right? Because they could have called the team on Wednesday, Thursday when the meeting was set up. So things like that may sound bizarre, right? But being organised, planning, and knowing your stuff, well, if there's a lot of BS and you the boss don't know what you're talking about, you will be exposed very, very quickly.
If you had an additional 2 hours each day, what would you do with that time?
I probably, if I'm being honest, right, you're probably going to do something completely outside work. But at the same time, I would say if it's work related, it's studying and it's studying the if you've got a meeting coming up tomorrow morning with a large corporate, read the goddamn annual report, all the news stuff, right?
True.
When I was telling my class, right, I remember one guy showing up to meet the CEO of Rolls-Royce, right, and he was saying how much he liked the cars, and the guy had to tell him that they sold the car business, 15 years ago. That was a very short meeting. So I would say is be prepared, right? Preparation is everything.
Yeah.
But there's no point in just reading stuff. You've got to actually think about what you're reading. So think about the issues, put it in perspective. That's the important thing.
Talking about the issues, what is the worst advice that you hear people giving out?
There is a lot of bad advice. Anyway, no, actually, funny enough, I just said your appearance is not important, but I was sitting about a year ago in a meeting with Lord Rose, who's the chief executive of Marks and Spencer's, right? Quite a senior guy.
Yep.
And I said, you've worked with a lot of people. How do you judge which ones are getting ahead? And he said, it's very simple. It's the same as in my father's days. I look down and I see if the shoes are shiny.
Okay.
Actually, I noticed one down there. You failed the Stuart Rose test. But actually, I would say, no, it's very hard, but a lot of people would say that you should all be similar to being the same, right? And therefore, all the social media, all this other stuff, right? You kind of got to be, the temptation is always to be at the same as your generation. And this is one area, I would say, the only time I've seen it where the modern trends are not heading in the way that will help people prosper at business.
Right.
Because if you're the guy when the boss walks past and you've got your head down with your earphones on, forget about that assignment. He's going to give the assignment to the next person, right? Who looks up and is alert.
So here is one out of the 0 to 1 book by Peter Thiel. Actually, honestly, it's one of my favorite questions to ask. What is something that you believe to be true that most people think is utter rubbish?
Well, I think in the day that we live in now, right, people think you can that you can sort of do pretty much what you want, and the old traditional values are sort of out of the window. And I would say in the workplace at senior level, first of all, just remember most of the CEOs are from the generation of the late 50s, early 60s, so they don't think that way at all. And being on time, showing interest, being properly dressed. I mean, these kind of ridiculous, in a way, ridiculous things are, to some extent, still important. Why? Because Stuart Rose, who I've just mentioned, right, with the shiny shoes, you might have the best intellect, the best ideas, but unfortunately he's just walked past you, right? He's going to talk to somebody else.
So, except for shining your shoes, what is the best piece of advice you have ever received? And from whom?
Well, from whom it would be definitely Steve Schwarzman, who was head of M&A when I was at Lehman. And he was basically, listen, you've got to understand accounting and you've got to understand business, but the most important thing is understand how business and accounting relate to ultimately to cash flow. So it sounds very basic, but I call it three-dimensional, right? You've got to understand all these three dimensions, and you've got to understand what drives the business, you've got to understand how it looks on an income statement, but then you have to understand how it's driven into real cash. So if you can learn that and you can model it as well comfortably, then you are in a rarefied world, because you can bet even at CEO level only a handful, probably 5% would have that capability. So that's why private equity will sometimes get it wrong, but it will many times get it right.
Do you have any daily habits? What do you do when you wake up? Do you just go straight to work? Do you grab your morning coffee?
I walk two dogs, which is actually very good for thinking, right?
What dogs are these?
Well, actually, I got one is really due to my partner, one is mine. I have a hunting, shooting dog, a spaniel, and I also own a Chihuahua, so that's a slightly unusual combination.
That's a
actually, the Chihuahua can run almost as fast as the spaniel, which is amazing. The only problem is when I'm thinking about these great business thoughts, I suddenly realize the Chihuahua is nowhere to be seen, right? And it's sort of take another half an hour to go and find it. But getting out and walking in the fresh air, clearing your thoughts, is certainly better than... and by the way, I always notice if I start phoning my clients or my friends and family, that's the first leading indicator, right? I will lose one of my dogs right away because I'm not concentrating where they are. So it actually tells you how real this stuff is, right?
This is a pretty important question to me because I really like the idea of mentoring.
Yeah.
And what is your stand on the mentoring thing? How do you feel that attending seminars, reading books, gaining knowledge compares to mentorship?
Well, I'm a massive fan of mentorship, and it's quite a hard world to break into, so I haven't really yet fully broken into it, but that's an area I personally would like to do a lot of in the future. I think there are two types of mentoring, so I believe very strongly in one form of mentoring, and I don't think there's value in the other. So many people will want to be mentored by Stuart Rose, let's just to give you one example, right, at Marks & Spencer, and he does do mentoring, only at CEO level. So you get Stuart Rose coming around, and by the way, he's got so many great stories, and obviously he's one of the most gifted businessmen of his generation. So you might learn a lot, but it's going to be quite a bit of war stories, general guidance, right? My form of mentoring is totally different. I would go in working with the CEO and actually engaging the areas of knowledge I have actually into his business, right? So I would be wanting them to start writing software, looking at drivers of what's going on in their business, because many times 1 month of each month of the year they will have a set of parameters at their board meeting showing what's going on, but these parameters have normally been in place for probably 10 or 15 years. So the answer is getting the CEO to actually think like a businessman, right? Like a real businessman. I think there's a lot of mileage in it. Are they open to it? It's kind of, you need a brand, and that's why the biggest of the headhunting firms, ironically, are trying to get into this now, because they would see this as a very much a value-added product. But someone like Russell Reynolds, for instance, would have a brand, right, that could be used in that area.
So if you could have a 5-minute 101 with 3 people who would you choose? Just go to Starbucks, grab a coffee, exchange.
Well, actually, one of them would be a big case study that's very controversially taught by me. But the one, I think Larry Page of Google.
Okay.
I would tell him he doesn't need his 70. First of all, forget about the driverless car, because I really don't want to. I'm going to be forced to drive one of those things one day. And secondly, you've got $70 billion of cash on the balance sheet. It's going absolutely nowhere, right? Most of the businesses they're buying actually are not that expensive. So dividend the whole lot to the to the shareholders. He's got a business where he is a founder and he's still acting like a founder, but he owns. He's in charge of a public company that has half a trillion of market capitalization. So he and his other founders have still 10 votes per share. The other shareholders only have 1. So this is a case, I would say, smell the old coffee, right? And there will be those kind of companies, by the way, will face a lot of challenges. But the answer is you only face the challenges when you are a very powerful company. Unfortunately, you delay facing the challenges until it's too late, right? When the crisis is upon you. So I will make a leading prediction, right? Those special votes will be gone in the next 10 years. A lot of the board will be completely changed. There are two. The head of Princeton and Stanford universities are both on the board of 14. This is not really normal. So I don't mind being a little bit controversial. I think if I sat down with Larry Page, I'd probably be thrown out of the room after a very short time. But it would be interesting.
So what would be the 3 pieces of advice that you would give to your younger self? If you could go back in time and just give 3 pieces of advice to yourself.
Well, I would say in a career point of view, first of all, always think big, right? Don't try and do yourself down, because if you think big and you can get to the very best place early on, your career will definitely improve. Secondly, I would say fully understand the dynamics of whatever companies. If you're working in a company, your own company, or if you're advising companies, the companies that you're advising, but really understand how their business works, but drill right down to cash flow above all else. That would be, you're always going to be able to be differentiated. And the other thing I would say is don't be shy of the numbers. The numbers always seem a little bit intimidating. Once you get into them, it's less intimidating. Who does the CEO take to a meeting when he's a bit uncomfortable about numbers? He takes the best numbers guy, always. And that person, by the way, could be quite junior, not necessarily that senior.
True. I would always feel way more comfortable with having someone who knows the numbers in the meeting.
Because the CEO does not want to be made to look a bit of an idiot, right? So he wants someone next to him or her that is that they know will have the right answers.
Let's just jump into books.
Yeah.
What are some of the books that you couldn't live without?
Well, I'm very bad at names, but I actually tend to be a reader of historical biographies and mainly war. I mean, I'm reading the book right now on the sort of march to Moscow of Napoleon, which is quite interesting. Mm-hmm. So I was, it's mainly because I'm just interested in history. But if you were to say any one of the top authors of the current moment in sort of fiction, I wouldn't have read any of their books, to be honest with you. Yeah.
We know that you are a writer in your free time.
Yeah.
How did this come along, the combination of finance and writing?
Well, it's one of those interesting things. I mean, I was actually a book I'd read. I was rather interested by the characters. So I started diving into a lot more detail. Ended up ending up basically writing a sort of book around this story, but it had never been properly researched before. Mm-hmm. And then this is where contacts come in. I was at a drinks party. I met quite a well-known literary agent, so he got me started. We agreed there's actually better for TV than for books, and the book would only sell on the back of TV. So then we involved quite a famous Scottish writer who's got 3 BAFTA awards, so serious guy. And now I'm talking to a sort of executive producer who will probably come on board. So, but that was one of the things this agent was very good at telling me never dilute too early, right? So at the moment I still own this small project, but unfortunately I think this executive producer will be greedy for a little bit of equity, I'm sure. So we shall see.
Obviously, yeah. Starting in a bar, I mean,
we'll see what happens. I mean, it's remote, possibly. It's a remote chance, but yeah.
Yeah, because no good story has ever started with someone eating a salad. So.
That's true.
We know that you have to run. You're a very busy person, so we'll try to respect your schedule. And so I just have one last question for you.
Yeah.
What advice do most people need to hear but hate to hear or don't want to hear?
Well, it's normally be organised, right? We all have the late night. We've gone to a party the night before. We got a key meeting, and actually, unfortunately, if that is the situation and you haven't managed to prepare, you need to get up you need to get out of bed at 6 a.m, right? Brush your teeth and do a bit of preparation for your meeting. Every single meeting is an opportunity. That's the interesting thing in life. And I've learned some of the biggest transactions I've worked on came out of the most unpromising meetings, right, to start with. So you just never know.
Okay, that was great. Thank you very much for taking the time out of your busy schedule to talk to us. We really appreciate it. And we wish you all the best.
Well, thank you.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.